Okay, it is 2 o'clock. Just a moment here. Let me turn something off on the other computer and we will. All right, welcome to the afternoon session of the 2020 Annual Report and Bookkeeping Workshop. This is Haley Treefin, Public Library Consultant at the Indiana State Library. This afternoon we have Susan Gordon, Todd Caldwell, and Leann Tinsley from the State Board of Accounts that will be discussing year-end bookkeeping activities, CARES grants, virtual audits, and other post-employment benefits. And we are going to start today with Susan Gordon. Susan?
Well, good afternoon, everyone. I hope you all had a nice lunch and maybe got outside to enjoy the pretty weather outside. Like Haley said, we have a lot lined up for the next couple of hours, so we'll go ahead and get started. I would like to thank Haley for always inviting us and coordinating this conference, and for Lisa for getting us everything we need so that we can present virtually today. We've issued several memorandums related to COVID, and we have some of them listed here for you, at least the ones that directly relate to the accounting for COVID grant funds. So I want to talk about that here in this first section. The state examiner did issue Directive 2020-3 to cover specific accounting procedures for IFA grants, and that would be grants to the Indiana Finance Authority. You'll not receive any grants directly from IFA. Those monies are allocated to cities, towns, and counties, but they may be passed on to you by your county or municipality. The memorandum dated August 27th of 2020 called the Financial Reporting and Reimbursement for CARES Funds. That discusses that overall process and the agreements that need to be in place. If you do receive CARES money from your county or municipality that's been passed through the IFA, then you will need to follow the State Examiner Directive 2020-3, and that is slightly different from the other memorandums. The COVID Grant Accounting and Appropriations Memo dated April 29th, which was updated September 29th, talks about the accounting for all COVID funds except those administered through IFA and that have been passed through the county and municipality to you. Now, here are some general rules for all COVID or CARES grants. Assistance provided as a result of a national or state disaster or an emergency should be receipted into a separate fund. A Board of Accounts is not going to take audit exception to establishing that fund or those funds without the adoption of a resolution. A separate fund should be established for each separately identified assistance that's provided. And the fund number range that you'll be using is 276 to 299. Now, grants again administered through the IFA do have specific procedures for 2020 in 2020-3. Oops. All related expenditure records, accounts payable vouchers, minutes, correspondence, contracts, and so forth should be maintained in a separate file for future audits required by federal and state agencies of COVID funds. And also for each grant, it's important that you track every dollar dispersed for COVID-related expenses and maintain that supporting documentation for those expenses. It's also important to remember that sufficient internal controls over these transactions must be in place. And some examples of those would be the accounting for the transactions in separate funds, maintaining detailed records and comments, and providing audit trails through appropriate approvals and so forth. All of those are examples of good internal controls. Now, specifically, I want to start with State Examiner Directive 2020-3, and again, that focuses only on those grants that are administered by the Indiana Finance Authority. And like I said earlier, you might receive some of these grants through your county or your municipality. The directive contains prescribed accounting procedures for these grants, And the directive goes through two, it's split between public health and safety payroll costs, which would not be applicable to you, and then permitted costs other than public health and safety payroll costs, which would be applicable to you. So we'll just dwell on that second half here. A separate CARES grant fund does need to be established. The directive provides the authority to create that separate grant fund, so you do not need a separate resolution. And again, you'll use fund numbers between 276 and 299. All money received from the Coronavirus Relief Fund must be deposited into a separate CARES grant fund. Again, that first half, there was two options for public health and safety payroll costs. We'll skip over that. We're just going to cover the other permitted costs here. And that gives you three frameworks to work within as far as accounting for those funds, depending on the situation that does apply. So we'll go through each one of those. Framework 1 applies when you have reimbursements for costs which were originally incurred in another fund. So here's the steps that you're going to take for that. You're going to receipt your reimbursement into the separate CARES grant fund, and then you're going to move the reimbursed expense from the original fund to a separate CARES grant fund. That's exactly the same procedures as you would for any of the other COVID funds. This action will result in a CARES grant fund balance of 0. And then no money would remain in the separate CARES grant fund for expenditure.
Hi, everybody. I'm going to take it from here, and I apologize for my throat clear just there a second ago. But let's take a look at an example of what Susan just talked about and kind of put it in terms of real-life experience and see if that helps. So in this example, a library purchases equipment to hold a virtual meeting, and they end up paying $5,000 for that. The original expense is paid out of the operating fund. The library submits a reimbursement request to the county or the city or town, and they get $5,000 back. The reimbursement is receipted into the separate CARES fund, and so assuming it had a 0 balance to start with, it will now have a balance of $5,000 from that reimbursement. So in order to match the expense up to that separate, to the CARES grant fund, what you're going to do is reverse the $5,000 disbursement that's in the operating fund, move that out, which will then reinstate the appropriation line item that was originally paid out of, and it will also bump your cash balance back up. And then the library would post that $5,000 disbursement in the CARES grant fund, along with a link to the original claim and the paid invoices and such. And now that will bring the balance as a separate CARES grant fund back to 0. So you started with a 0 beginning balance, you moved the $5,000 reimbursement there, you moved the $5,000 expense there, and now it's 0.
Okay. So that was framework 1, where your cost is incurred originally in another fund. Framework 2, it's possible, although hopefully this won't happen, but IFA might provide a reimbursement where you have an unpaid invoice or purchase order, and that would be, of course, through your county or municipality. If that happens, then you would go ahead and receipt the money from IFA through your county or municipality into the separate CARES grant fund, and then you would pay your vendors directly from the separate CARES grant fund. Now, the key here is to make sure that only costs that were included in the original request to your county or municipality and those that are directly tied to the amount provided will be paid. If there's any difference between the amount paid to the vendor and the amount provided by your county or municipality, then you'd have to return that. And if that's all done properly, then your CARES grant fund balance should be 0. And then there would be no money remaining in the CARES grant fund for expenditure. And Todd will go over an example of this as well.
And before I go over this example, there is a question in the chat about what do you do if your expenses are more than reimbursement and you end up with a negative balance. I think we're going to touch on that in a couple of slides or in the next few examples. So let's take a look at what Susan just went over. And in this case, the library needs to order emergency. Susan, did we go too far ahead or am I behind?
I think we're on framework 2.
I am. I did. I'm sorry. I was further in my slides than where I should be. So in this case, the library is ordering emergency equipment for $10,000, and they send a reimbursement request in prior to them actually paying for that piece of equipment or those pieces of equipment. And they get reimbursed the $10,000, and they receive the $10,000 into the separate CARES grant fund, which now is going to have a balance of $10,000 in it. However, the library decided in the interim to actually purchase less equipment, and they make a payment to the vendor for only $8,000. So now we're left with a balance of $2,000 in the CARES grant fund. And as Susan explained, that $2,000 then would have to be returned to the county or the municipality in order to get your fund back to zero because you didn't actually spend all of what you thought you were going to spend.
Okay, so hopefully you won't be in that situation of having framework 2, but we wanted to talk to you about it in case you are. The next one is framework 3, which is probably more common, and that's where costs have been paid from the separate CARES fund in anticipation of reimbursement. This would cause you, of course, to incur a negative balance, and that is what you were originally told to do in the April 29th memo. And again, keep in mind this directive is only for the IFA grants. So the state examiner directive has changed that. Your steps here are going to be to receipt money from your county or municipality into the separate CARES grant fund, and then that's going to cause your CARES grant fund to be zero because you would have had a negative balance in there, and the reimbursement should zero out that fund balance. Going forward, follow framework 1 and do not pay the costs out of the separate CARES fund in anticipation of reimbursement. And that way you'll have no money that will remain in the CARES grant fund for expenditure. Now there is a question here, what if my negative balance in the CARES fund is not fully reimbursed? In that case, what has not been reimbursed, you're going to reverse that entry in the CARES fund for any costs that weren't reimbursed. And then you're going to post that expenditure to the operating fund or some other appropriate fund within an appropriated line item. And then the CARES grant fund balance should be zero at that point. And then no money would remain in the CARES grant fund for expenditure.
Okay, so a real life example of this would be if you had to purchase, we'll say $5,000 of PPE, and you posted that expense directly to the CARES grant fund, which left you with a negative balance of $5,000, assuming that you started with zero. Then you turned around and you submitted a reimbursement request for $5,000, but you only received $4,500 back. For some reason there was something that you purchased that didn't get, okayed, and so they weren't going to reimburse you for it, and you just ended up getting $4,500 back. Then the library is going to receipt the $4,500 into the CARES grant fund, and that's going to leave a negative balance of $500. So then what you need to do is reverse the expense for the unreimbursed amount out of the CARES grant fund and post that expense to your operating fund, and then that will get your CARES grant back to zero. Sorry, I was reading the chat. There was one person was not seeing anything on their screenshot, so they weren't sure which one we were on. We should be on slide 16 right now, if they're numbered anywhere that you can see them. The other question was, is reimbursement to a gift fund treated the same as operating? Lisa, I suppose you're saying that you paid for the expense out of the gift fund to begin with? And while you're answering that, I will go on and talk about Framework 3, the additional example. Since April, when we first sent some of this information out, library's been accounting for purchases and reimbursement purchases directly to the Character Grant Fund, and it currently has a negative balance of $15,000. When the $15,000 gets reimbursed from the county or the city or town, the money should be received in the CARES Fund, and that will bring the fund balance to zero. So like Susan mentioned earlier, as of October 23rd, when the directive came out, no further expenditures should be posted directly to the CARES Fund. And Susan, if I could address that question. And I've lost it now. Oh, Lisa said yes. We've mentioned the operating fund. If you've purchased an item out of a gift fund that's getting reimbursed, then yes, you would treat it the same as the operating.
Okay. So, as Todd said, October 23rd is the date of the directive. That's why that date's important. Eligible costs should be dispersed from the appropriated line item in the operating fund or another fund from now on when it involves grants that have been distributed through IFA. When reversement is received, then you would follow Framework 1, which is that reversing of the entry. And then once those steps are completed, the balance of the separate CARES grant fund would be zero. And then no money would remain in that separate CARES grant fund. Okay, so the directive deals again only with IFA money. The accounting procedures for other grants is slightly different, and that's our grants not administered through IFA. So if they're not, then you're going to follow the April 29th memorandum, which was updated on September 29th. And you're going to receipt it into a separate fund, and that range is 276 to 299. And you should have COVID as part of the naming title. In some cases, disbursements made prior to receiving that COVID grant can qualify as an allowable cost from a COVID grant. So in order to track those disbursements properly, then your allowable disbursements should be moved from the original fund to the applicable COVID grant fund, much like a correction of error is recorded. That's that reversal. And then so that's the ones that have been incurred prior to receiving the grant. All other allowable disbursements from receiving the grant forward should be dispersed directly from the appropriate COVID-related grant fund. And that doesn't apply to the IFA grants, but applies to all of these other COVID grants that you've been receiving. So in that case, then you will be incurring a negative balance in your COVID-related grant fund. Now, some CARES Act grants that we're aware of for libraries from the Indiana State Library. There is money being received from the Institute of Museum and Library Services, and the Indiana Humanities Council, received from the National Endowment for the Humanities. And again, you may be the recipient, you may or may not be the recipient of IFA money through your county or municipality.
Okay, let's talk about some of those grants, some of maybe the most popular ones. And I apologize. Sometimes in my PowerPoints, when you see it, it comes up a little formatted differently than what I had it. I had all of these on one line, and then I've added one which you may not be able to see, but I'm going to talk about them just the same. So I apologize for you not being able to see it. But the most popular one is that Coronavirus Relief Fund, and that's the one that goes through the Indiana Finance Authority, the IFA, that then goes to your county or your city or town, and then it comes back to you. On this screen, you'll see the CFDA number. And why that's important, that is all federal grants have a CFDA number, and when you do your annual report, you're going to have to identify these grants and report them and use that CFDA number. Now, some of you may not very often have federal grants, and any of this money that you're getting is considered federal, so you're going to have to report those on your annual report when you do those. early next year. When you start that process, when you're doing the annual report, you go through the series of questions, and it asks if you received any grants from federal sources, and you're going to say yes now if you got one of these COVID grants. It will then give you a section where you're going to input that, and I'm going to show you what that looks like in a minute. The one I added, I believe, was 45.310, and I think maybe you can see it on this next slide. Yes. That is not in your materials. So that third one down, 45.310, probably isn't in the materials that you got or that you've downloaded, because after we did this first session late last week, someone mentioned that 45.310 was a CFDA number for a grant they had received, so I added it to the list. But these are the four that we know of. The middle column is the program name, and then that far right-hand column is the federal grantor agency, and you're going to need to know that for when you're doing your annual report. So if you get some of this money, maybe you're not sure what the name of it, the proper name is, or you don't have the CFDA number, you can go to a website that's beta.sam.gov, and you can look it up. You can find all kind of information about the grant at this location. You can search it by the name or the number. So to give you a little preview of what that looked like, I searched by 21.019, which is the Coronavirus Relief Fund. And when you click on that, it brings you to this page. You can see it says showing one of three results. There were two other results related to this grant. I didn't put them in the slide just for space reasons. So you can see the Coronavirus Relief Fund. You can click on the blue title name, and it gives you much more information, a lot of very in-depth, federally worded information related to this grant that you can read if you want to. It'll also show you the CFDA number over on the right and give you good information there. Then when you get into the annual report, as I mentioned, when you say yes, did you get grants, you're going to get this page will pop up as you work your way down the list, so you'll have to enter information in it. So like on the first line, I just typed in the CARES Grant Fund. The program name is Coronavirus Relief Fund. The federal agency, remember I mentioned you're going to need that, Health and Human Services. Who does it pass through? So who are you getting this money from? And in this example, it was the town of Gordonville. And the CFDA number, moving to the right, is 21.019. And then you'll keep sliding to the right. What you see on the screen, there are actually more columns off to the right, so be sure that you use the slider and go clear across, because it won't take you there automatically as you fill this out. Also did the same thing for another grant. This one happened to be one that comes directly to you. I'm sorry, it passes through the Indiana Humanities. It does not pass through your city or county. It has a grant number 45312, and the same kind of information as you go across. You're going to put in the amount of receipts, the amount of disbursements for this fund, and then that'll be information that we will need to know when we come in to do the audit. So let's take a second before we go any further and look over some questions. Someone asked, how long is it taking for reimbursements, and do all the reimbursements need to be in 2020? They don't all need to be in 2020, and any reimbursements you get don't have to be spent in 2020, and I don't know how long it's taking for the reimbursements. That would probably be a question for the Finance Authority, the IFA, or your local county or city that you would be getting the money from. Someone said 1400 from Indiana State Library is which one? Julie, if that's a number, you might be missing a digit, because those CFDA numbers have 2 digits and then a dot and then 3 digits. So maybe check that. Now, where do we go to get these numbers? From whomever gives you the money should be able to give you those numbers. So if you're getting money from your county, ask them what the CFDA number is if they don't provide anything that points it out very clearly. Question, so COVID grants awarded this year but not reimbursed until 2021. We don't need to include. Correct. On your annual report, if you don't get the money until 2021, you would not show it until you're showing 2021. So even though you may have disbursements in, today that don't get reimbursed until next year, you're going to show that activity next year. Reimbursement grants work that way. So, and if you have any specific questions on the timing of that and you want to email either Susan or myself, feel free to do that. If you're using the old ledgers, do the CFDA numbers need to be labeled in the ledger? If you've got hand-posted stuff, it would help to have the CFDA numbers labeled in your ledger somehow. Oh, I see. 1,400 is referring to the dollar amount, and what category would that fall into? I think just like it would fall into the CARES grant fund, like we've talked about. So you would get $1,400. You would put that in the CARES grant fund. If that came from the state library, that would be in a separate fund. Remember, Susan talked about right before I showed you some of those CFDA numbers. If you got a grant that was not an IFA grant, it was not from your county or city, but if you got from in this case, directly from the state library, you would create a separate fund. So you might have two CARES grant funds. One would be for monies that you got from the IFA through your county or city, and then another fund for the state library grant that you got $1,400 for. If you got another grant, you might have a third. So they all need to be separate. Just try to keep that in mind. And then, do we need to update our financial reports on Gateway if we received a reimbursement? Your financial reports on Gateway? No, the ones that you're uploading monthly, no, you would not need to update those. Just go ahead and if you get a reimbursement this month that you have to reverse and do all that entry in the month of November, for let's say, and maybe your original entry was in October, just leave the October reports and just do the ones for November, and you don't need to go back any. All right, I'm going to keep moving along because I want to get Leann done or get her started right at 3. So if we could go to the next PowerPoint presentation on Virtual Audits 2.0. I've called it Virtual Audits 2.0 because we, a couple of years ago, talked about doing, at that time it was remote audits was the terminology. Oh, I jumped ahead. I'm so sorry.
It's okay. I'll try and make this section quick. No, it's okay. I'll try and make this part quick because we need to get to yours too. We'll still get Leann close to 3. I do have a few things to talk about for this workshop as far as year-end duties are concerned, and a lot of you are familiar with this, so we'll go through it pretty quickly today, and then you can email us with any questions you might have. It's kind of broken down into 3 parts, and the first one is just the reporting that you have to do at the beginning of the year with the annual financial report and the Form 100R, and then, of course, the ongoing monthly and annual uploads. Most of you would know that the annual financial report is due in Gateway on March 1st, and it is required by statute. It is your library's financial activity for the year, and that's a very important report. You will be pleased to know that we have no major changes to the reporting in Gateway this year. We were supposed to have some significant changes due to the enhanced regulatory update, but because of COVID, that has changed. You'll also want to make sure that you do have internal controls surrounding the submission of this report in Gateway. For example, having one other person, maybe a board member or another office member, review the information that's been submitted to make sure that that agrees with the ledger. And then also have some written evidence that that internal control has been completed, like a checklist or maybe an email confirmation or something like that. Your regulatory financial statements are compiled from the information that you enter into this report. So it's very important that your submission is accurate and it's on time so that the audit can go as smoothly as possible. Now in the core reporting section, you're going to have to complete the financial data by fund section, which shows your beginning balance, receipts, disbursements, and ending balance for each fund. And then you're also going to have to answer a series of questions. And depending on how you answer these questions is going to depend on what schedules you have to complete. But here's a list of the schedules that are possible. For example, if you answer yes, we have capital assets, then a capital asset schedule will be generated, and you all have capital assets. If you answer no, that you don't have any debt, then you won't see a debt schedule to complete because that will not be generated. Each one of these schedules that is required has specific information that you will need to complete, and you can read all about that in the user guide. That's a very detailed guide with all of the requirements on it. Today we decided to emphasize the OPEB report that our coworker Leann Tinsley is going to talk about around 3 o'clock. We had a lot of questions on that last year, and she's going to address those for you today. There are a couple of risk assessment questions I wanted to call to your attention. One of them is, does anyone review the completed bank reconcilements? Please make sure that if you don't already, have internal control procedure around that process so that you can show that there's either a segregation of duties or a review process around your bank reconciliations. And again, you need evidence that that review has been performed. And then the second one is, have items included in the most recent Board of Accounts report been adequately corrected? That's important so that you won't have a repeat finding in your report. So we would recommend that you go back to the last audit report, which you can find on our website. Take a look at the comments section that would be in the supplemental report, and see if those things have been corrected. And then you can let the field examiner know at your next entrance conference that those have been corrected. If you still have some outlying issues that have not been corrected and you don't know how to correct them, then please give us a call and we'll try and guide you through that process so that you can get those resolved. Okay, the next item is the Form 100R, which is the certified report of names, duties, addresses, and compensation. That also is required by statute, and it'll be due January 31 of 2021. Once again, we have no changes to the reporting, and we would recommend that you also have internal controls surrounding that. We appreciate everybody's cooperation with doing the monthly and annual engagement uploads. That is necessary for our remote auditing. We started it July of 2018, and it is now time to tweak that a little bit, especially since we're nearly 100% of the time now doing remote audits. So that information will be coming out in the near future, and when it does, we will let you know about that. But until then, we really appreciate the work that you've been doing so far. Here is just a list of those things currently required for the monthly uploads that you've been doing, and then also a list of those things required in the annual uploads, and those are due March 1st along with the annual financial report. Again, both of those things are going to be updated soon. On the second part of our year-end duties, just want to touch on two things. One is cancellation of warrants, and one is names and addresses to the county treasurer, just to remind you about that. The statute does provide that all checks outstanding and unpaid for a period of 2 years as of December 31 should be declared canceled. And what you'll want to do is you're going to be preparing a list of all of those outstanding checks for 2 years or more. On March 1, you're going to do that. and then you're going to file a list of the checks with the library board and then keep a copy for your office. As far as names and addresses to the county treasurer, that's done on June 1st and December 1st. The dispersing officer needs to certify the name and address of each person who has money due them from the library. And then the county treasurer will search their records to see if anyone on the list is delinquent in the payment of property taxes. Now, if that happens, then the county treasurer is going to certify that list back to you, and then you'll be required to make periodic deductions from money due that person. And the statute is not clear on what that means. It just says shall periodically make deductions. So if you find yourself in that situation, the library attorney is the best person to talk to about that. And then in this next section, these are just some frequently asked questions we get this time of year, so we thought we would go ahead and address those related to appropriation transfers, encumbrances, dormant fund balances, and just some internal control considerations. So regarding transfers of appropriations, toward the end of the year, you might have a line item that's going to be overspent, and you would end up in a negative appropriation situation in that line item if you don't take additional action. This statute does provide the authority for you to transfer appropriations from one line item to another within a major budget classification. So you can make that transfer if it's determined that it's necessary by your board, and it doesn't require the expenditure of more money than the total set out in the budget. It does have to be made at a regular public meeting by resolution, and then it can be also made without notice and approval of the DLGF. So I wanted to remind you of that. Also need to remind you of encumbrances. You can encumber appropriations if there is a purchase order or contract in place by December 31. You'll show the encumbered amounts separately on your 2021 appropriation ledger, and it will be added to the budget for that purpose. So if you have an unpaid purchase order for supplies from December, you can add that encumbrance to supplies for 2021 as opposed to some other, budgeted line item. And in that way, then your 2021 budget will not have to carry the expense that was from the prior year. So what you'll need to do for that is give the library board a list of those encumbered items, those items that have not been paid as of December 31st, for which you have a contract or purchase order, and then they can make that a part of the minutes in their last business meeting of the year. The appropriations that are carried forward cannot be used for any other purpose other than the purchase order or contract for which they were appropriated. So that's important to remember. Dormant fund balances, here's the statute related to that. If you're going through your records and you have a fund where the purpose has been fulfilled, there's no further activity in that, or there will not be any further activity, and you have a balance remaining, then you can transfer that balance to the general fund, the operating fund or the rainy day fund, if the library board approves that. So you can take a look at that statute if you find that you're in that situation. And then finally, we just wanted to talk about some internal controls. Year end is a good time to review your procedures and make sure that they're all well documented. I'm sure all of you have had changes due to COVID, and you just want to make sure and go back and think and make sure those procedures are documented as well. And also make sure that you have evidence that a procedure has been performed as intended. Our field examiners look not only for your written procedures, but also for tangible evidence that the procedure was performed. And just as an example, how will our field examiners know that someone reviewed the bank reconciliation? Was there a checklist or an email or an indication of a signature? And also just make sure that you have this evidence that they should be looking for included in your procedures. For example, your procedure might say, a board member will review the bank reconciliation and outstanding checklist and will confirm that by email. Also, just evaluate whether your controls are effective, and don't be afraid to change them if they need to be changed. If you need some help with this, you might want to check our best practices document that's on our website on the library page. And again, just remember, internal controls change as our circumstances change, and this year, of course, we have had many changes. Okay, now we can look through. I'm not very good at this chat box. Todd may need to help me, but we can try and see what we have.
Let me jump off. There's one there in the middle that says, this summer we paid off our debt, so I need to report the payment for 2020, but no debt going forward. How do I answer the debt question? And I think that question asks if you have had any debt during the year, so you can say yes, and then that debt schedule will pop up during the annual report. You'll be able to show how much you owed on the debt at the beginning of the year. You'll be able to record how much you paid, and then that'll show a zero balance for that debt item at the end.
Right. On the
And then below that,
yeah,
go ahead.
Oh, I see one here on a revised salary schedule. You would need the updated schedule, or maybe both. Since they're dealing with a schedule, they would need the original one and the updated one.
Yeah, they could go ahead and do both,
yeah.
I think. And then there was a question about if the item is within the same major classification or appropriation, is a resolution needed, or can the funds be transferred and noted in the ledger? And the example they gave was operating supplies is depleted, but appropriation remains in repair and maintenance supplies. Those are both under the category supplies. Can they do that, or do they have to do that by resolution, or can they just do it in the books and make note of it? And in that example, since it's all under supplies, I think you could go ahead and make that change yourself without the resolution, although we'd recommend letting your board know that's what you did because the one had been depleted, so you moved it to the other. But if you went from supplies to capital outlay or supplies to salaries or something like that, that's where that resolution would be needed.
And then
there's a question, could we add a...
No, go ahead, Todd. It's fine.
Could we add a fund to our budget and transfer funds into it to purchase property with operating funds?
And you can do that with LERF, right? You can transfer an appropriated amount to LERF and then purchase property through LERF. But right. I don't think there's a way to. There's no statutory authority to create another fund that's not named in statute.
Next question is, we usually do an end of the year financial meeting, which is actually a second meeting in December. The trustee has asked if that's necessary to have the second meeting to do year-end claims and funds. You know, it might depend. That's probably a good idea. If that second meeting is right at the end of the year, it's a good time to wrap up any outstanding claims or anything that you've got hanging around. It's also a good time to know if you've got, approved anything that can be encumbered into the next year at that time. And if your meeting is like the first Tuesday of the month, a lot can happen in the remaining days in December, and so it's not required. So the answer to the trustee is, if it's necessary, no, it's not necessary, but it might not be a bad thing either. Okay, let's go ahead and move on to what I tried to jump ahead with earlier. Got so excited to tell you about virtual audits that I stepped on Susan's toes a little bit, so I apologize for that, Susan. As I said before, we touched on this a couple of years ago when we called it remote audits then, and we were moving in that direction of doing more off-site audit work and not being at your location as much as we had before. And then COVID came along and forced our hand into doing these a lot more more rapidly and a lot more remotely than we had really intended. We kind of were trying to ease into it and didn't get a chance. So I want to go over some of things related to this and kind of refresh you. That's why we've called it Virtual Audits 2.0. And I would start with just a reminder on some of the statutory requirements for us to even do an audit. 51119 requires us to do audits of all public entities. We're supposed to do those by that statute once every 4 years. We might be in your location a little more frequently depending on if you have some debt issues or some bond rating agencies want to see your audited statements more frequently. And that can be, if you've got those, we might be there every year. And then if you spend over $750,000 in federal grants, that triggers what we call a federal audit. Not too many libraries have those, but those are annual as well. So if you had that on a recurring basis, we would be there more frequently. The goals of our engagements are to provide an opinion as to the correctness of the financial statements as they are presented. An unmodified opinion means that no modifications have been made to our opinion and that financial information is materially correct. A modified opinion lets the reader know there are reasons that need to be taken into consideration when they're relying on the financial statements. In other words, we've modified that for some aspect. Then we have another goal is to provide the reader with issues of noncompliance, those that are what we call substantial and impactful, and that's what we refer to as results and comments or things that we're going to write up in the report. And the final goal or another goal is to provide management with less significant noncompliance issues through the issuance of a management letter. We call that a management letter. Those are things that are not in our audit reports there, so it's not anything that goes on our website, and it's not public information. So the end result is one of these three reports, and then possibly a letter, as I mentioned. First one is the audit report. That's going to have your financial statements. And in those rare cases where you've got more than $750,000 in federal grants, we'll have a report on those grants. If there are audit results and comments, those will be in a supplemental audit report. Oops, went wrong way. We also do reviews. Those are less in scope than an audit. They have your financials statements in them, but no opinions, and those are normally for units that don't have debt. We sometimes do compliance reports. There are no financials in this report. We are only reporting on compliance with laws and accounting guidelines. These are usually in cases where there's some overriding issue with the records that we're not able to really do much with them as far as putting them in financial statement presentation and opinions and such. So we just only report on compliance, and then we state that in our opinion letter or cover letter that goes with the report. And then the management letter that I mentioned. So this is where the virtual part of our audits come in, where we had talked about a couple of years ago to where we are now. Now we are doing all remote or all audits virtually. We are off-site, I would say probably 95% of the time. We might be in person for an entrance conference, an exit conference, or maybe in the middle of an audit to get some materials that can't otherwise be delivered electronically. I'm going to talk a little bit about how all of that works. But first, let me talk about some forms that you're going to get prior to an audit. The first one's the Form 13. It is to help us gain an understanding of the design and implementation of your internal controls at your unit. Oops, went too far. So you'll get this form and you'll be asked to complete it or update one from a prior audit and send it back to us. That'll be about the time that a field examiner is assigned to your audit, but it'll be before the audit starts. So that could be, a couple of weeks, or it might even be sooner than that you'll get this. But if you do get these forms, I think the information that's provided lets you know that an audit's been assigned and will be happening soon. I went the wrong way again, sorry. On the right-hand side is another form. It's the Form 9. It's the understanding of your library and the environment that you operate in. Helps us know what's going on in your communities. If you've got significant growth or people are moving away, businesses are closing down, that can only impact how your library operates. And that's important for us to know and help planning for our audit procedures. The form that you have there, if you can read it, it's very small, but in the upper left-hand corner of the form on the right says City Town. That happens just to be an illustration of the form that we use for cities and towns. We have a different form for libraries, and I was just updating another presentation, so I didn't get to copy the library form, what it looks like. But the top half that you're seeing there would be virtually the same for a library. Next is an important form. It's the Form 13, and it's going to ask for you to initial and sign in certain places, attesting to that you're accepting the responsibility of the financial statements. So when you input your data in the annual report each January or February, we will take that and massage it into the format of a financial statement. And then in order for us to do that or compile, put that together, and then turn around and audit that information, we have you fill out this form that kind of buffers that from us so that we're not putting together your financial statements and then turning around and auditing them. That would kind of impair our independence. So this form has you take responsibility that the information in the financial statements is the same basically as you put it into the annual report, and you acknowledge that by signing it on page 2, and then you'll also be initialing next to the items on the left-hand side on the front. So once you've done all those pre-audit forms, now you'll get into the exit conference. If you've been through an audit before, you've been invited to the exit, or to the entrance, I'm sorry. Also, the board president is invited as the leader of the body of governance. You might also have a director or a bookkeeper, your treasurer or your fiscal officer would also be there. And they're going to talk about a variety of things. It'll give you an introduction to the field examiner and an overview of things that we're going to cover. We'll also go over what some of the expectations are, both from you as the auditee and from us as the auditors. The field examiners are going to explain the objectives of the audit, everybody's responsibilities. They're going to talk about the audit fees. This should give you an estimate of, we think this library is budgeted for this number of days, and at our standard rate, it should cost you in the ballpark of this amount, and kind of let you know that up front. It's also a great time to ask any questions that you have during that audit process. And that entrance conference is going to take place virtually. We use Microsoft Teams for our virtual meetings, and you don't have to have that necessarily on your computer systems, but what will happen is they'll set up a meeting, send you a link, and then you'll click on that link when it comes time for the meetings, and you don't have to have a camera, just as long as you can hear us and we can hear you. And then if you still have issues and that's not available, you can always set up something on the telephone. There might be sometimes, depending on the situation, we might do the entrance conference in person. just so that we can have a brief meeting and that you can be in the same room and see people. I know you can see them when they're on the screen in Teams, but there might be the occasion to have that, but not always. This slide is just what the entrance conference form looks out. So everything that we talk about at the entrance conference will be on this form. It's many pages long. I just put a copy of the front page and the last page. That last page is where you will sign it, and then you need to print it, sign it, and return it to the field examiners, because more than likely you'll be getting this electronically, like I mentioned. Okay, so far we've covered some of the preliminary work and the entrance conference. Now let's get a little bit more into what the virtual audit looks like and how it's going to function if you haven't been through that before, and then the exit conference and maybe some reports. So the virtual audit is going to be conducted virtually through the internet, through Gateway. So the fourth item down there you see is the Gateway direct request emails. When the field examiners needing some information from you that they don't already have, they will send a direct request through Gateway, and it'll request whatever document they're looking for. Maybe it's a contract that they didn't already have. And then what you'll do is scan that document or documents, upload it into Gateway, and it goes directly to the field examiner, and so they'll have it. They will already start off with having your monthly and annual uploads, so they'll have some preliminary information. And when we get into testing claims or contracts, like I mentioned, there are going to be things that they're going to need, and they'll do it through the direct requests. We want to try to have communication. Communication is a key to a good audit, so we want to set up some kind of weekly contact where we can just have a sit-down meeting and see how things are going, if there are any outstanding questions to go over. Maybe some of the records we've requested, but you haven't gotten them to us yet. If you've got any questions related to the audit work, just a progress of where things are, and to address any concerns that you might have. And those direct requests I mentioned, if you get a direct request for a certain document and maybe it's going to take you some time to get that put together, let the field examiner know, communicate that with them. For example, if they send you something on a Thursday and they would like it by the next Wednesday, but you happen to be on vacation that week, just let them know. It might be the weekend after that before you can get it to them. Or maybe you can make arrangements for somebody else with the library to send that information to them, but just let them know what's going on, and they can work around that. That won't be an issue. So when you get a direct request, you're going to get an email that's going to be from noreply@sboa.in.gov. It's going to ask you for the specific thing that they're looking for and instructions on how to upload it. And just email the field examiner when you've uploaded it, just kind of ensure that they know you've done it, because they will have other audits that they're working on at the same time, and that'll just give you a little comfort in knowing that you've let them know that, hey, I've tried to comply with what you've requested and I'm sending it your way. Here's what the upload is going to look like in Gateway. It's in the location where you do your monthly and annual engagement uploads. Over on the left, you'll select the group direct request and then audit request. So you've received this request, and that's why you're selecting this file type. You'll then go over to the right and you'll upload that file from where you scanned it and put it on your computer. You'll go choose that, and then all you have to do is click the submit button and it goes to the field examiner. Then you can always check the ones that you've sent. It'll show you the direct requests that have been made, and if you've uploaded a file and sent that in. Obviously, if you haven't, like that bottom row there says audit request. If you hadn't filled that or hadn't sent that yet, there'd be an X there and there would be no file there, so you would know, oh, I've got that one outstanding, but I've sent the ones above it in. I'm going to skip over these next few slides about what we're looking for and how to prepare and what the field examiners look for. You know, the first one on that slide is understanding internal controls. You know, that's always a hot topic with us. We've tried to train on that quite a bit. Are there any other responsibilities that you might have during an audit? There are a couple of other things. One is the request from the attorney for certain information. The standards that we audit under require us to get that information because there might be something that's financially significant that needs to be disclosed in a note. So, for example, if there's a lawsuit against the library, the attorney would be able to tell about that, any legal things. And then there's also a management representation letter that you'll sign at the end that will basically say you didn't know about any fraud that you didn't tell us about. You gave us all the records we asked for. Our findings are communicated by an audit result and comment. A management letter, I've talked about those two previously. We have some things that we just will tell you verbally. Like if we were testing deposits and we found one that didn't get to the bank timely, like the statute requires, and it was the only one in the whole year, we might say, hey, we saw this one was 3 days late. Just to let you know, it wouldn't rise to the level of being in writing anywhere. We do have those from time to time. I want to talk a second about repeat comments. Those are comments from a prior report that the situation didn't get corrected, so we repeated it in this audit report. And now, as of a couple of years ago, if you have a repeat comment, you have to file a written corrective action plan. And there's a template for going through that and a place where you send it. The field examiners can walk you through that and tell you how to file that, so because then you have a certain amount of time to actually implement what your corrective action is. Okay, let's move down to the exit conference and reports really quickly. At the end of the audit, we have another meeting with you to discuss what's happened, what we found, to let you know we're done. We'll talk about the draft report, any comments that are in there. If you have to do a corrective action plan, it gives you also the opportunity to respond to any written comments that are in the report, and then you can have that response included in the audit report itself. And then that last line down there at the bottom is important too, that the results of the audit are still confidential until the audit report is filed. So don't go from the exit conference into a board meeting the next night and start talking about all the things that were discussed in the audit, because that's still confidential until the report is actually filed. There's a slide on what the exit conference form looked like and some information on the costs. I'm going to skip over these because not many of you will have federal audits, but these slides will talk about some of those items. And then the reports, just wanted to show you a quick example of what they look like. This is a financial statement report. The cover will say financial statement report, and that's the one that has your financial statements that look like this. And then if you had any written comments, that's in a separate report. It's called the financial statement supplemental report. If we happen to do one of those reviews that I mentioned, everything would be the same, it would look the same, other than the title page would say review report, compliance report. This is the management letter that I mentioned. If we had items of non-compliance that we're not going to put in the audit report or discuss verbally with you, we'll put it in this management letter. And it's a letter to management, just let them know we found these things, they weren't significant enough to put in the audit report, and we will follow up on those in the following year. So if we put something in the management letter that you don't correct, then it will probably bump up to a written report in the next audit. All right, I went through that fairly quickly. Obviously, if you have any questions, you can always get a hold of us. by phone or by email. There was one question that came in and said, what is the best or new training tool for new trustees on internal control guidelines? There's previously been a video. I think that's for a board member, that's probably the first thing I would have them look at, is that if they want some training on internal controls, have them view that video. We also have a manual that's on our website on internal controls that they could read through. Those would be the first two things, and then after that it gets a little more specific, and so you might have either them or yourself reach out to Susan or myself, and we can kind of address that from that point. All right, well, now I think it's time to move on to our next presentation, and I'm a few minutes late, so I apologize for that, but I'd love to introduce our next speaker is Leann Tinsley from State Board of Accounts. Leann's our Senior Professional Standards Compliance Officer. And like Susan mentioned earlier, last year we had quite a bit of questions from all different types of units, but including libraries, on post-employment benefits. So we thought it'd be a good opportunity for her to explain that and give you the chance to ask her any questions you might have. So Leann, I'll turn it over to you.
Thank you, Todd. As Todd said, I'm Leann Tinsley, and my presentation today is designed to assist you in completing the OPEB portion of your annual financial report when you file that in Gateway. As the Senior Professional Standards Compliance Officer, my main task is to research and then train my staff, the State Board of Accounts staff, on the various standards that we use, including the Governmental Accounting Standards Board pronouncements and the AICPA auditing standards. We use the AICPA auditing standards when we do your audit, and we are using the Governmental Accounting Standards Board pronouncements as the benchmark for how you've done in terms of presenting financial statements if you are one of those units that prepare full GAAP financial statements. I am not aware of a whole lot of libraries that do that, except for the Indianapolis Public Library I know does that. So the Governmental Accounting Standards Board pronouncements may not be very meaningful to you, but they are what we are looking for when we are particularly asking you about your OPEB plans, if you have any. I wanted to briefly go over GASB and its pronouncements to provide you a basis for the understanding, as I said, of the questions that we are asking in the OPEB section of the AFR. Generally accepted accounting principles, which we shorten to GAAP, is different for different types of entities due to different standard setting bodies. State and local governments, including those in Indiana, use the standards, as I mentioned, of Governmental Accounting Standards Board, which we call GASB. The private sector, including not-for-profit entities, which may be your library foundation if you have one, use those that are developed by the Financial Accounting Standards Board. Federal government has developed its own standards. Those standards are set by the Federal Accounting Standards Advisory Board, and some entities use those that have been developed by International Accounting Standards Committee, specifically those entities that operate in more than one country. When I am talking about GAAP in the rest of this presentation, I am referring to that is established by GASB. GASB, of course, does not remain static. Pronouncements can be amended or superseded. When we are talking about OPEB pronouncements, GASB has typically issued one pronouncement for the reporting, including note disclosures for the plan itself, and another one for the employer participants in the plan. GASB 57, however, is an exception to this rule. From 1990 to 2000, GASB 43 and GASB 45 were the pronouncements that were in effect. From 2010 until today, GASB 57 GASB 74 and GASB 75 are those pronouncements that are effective when looking to how to account and financially report for OPEB plans. It is important to go through the definitions on these next couple of slides. These definitions come from the current GASB pronouncements. I do not expect you to memorize these definitions, and there will not be a quiz later. I am providing you these as a common understanding of the terms is going to be necessary moving forward as we talk about how to report OPEB in your annual financial report and if you have to account and report for them in your financial statements in the future. First of all, OPEB stands for Other Post-Employment Benefits. These are benefits such as death benefits, life insurance, disability, and long-term care that are paid in the period after employment and are provided separately from a pension plan, as well as health care benefits paid in the period after employment, regardless of the manner in which they are provided. Basically, this means health care benefits paid in the period after employment are always OPEB, even if it is provided within a pension plan. Some things such as death benefits, life insurance, disability, and long-term care can be provided through a pension plan, but that does not change that pension plan to an OPEB plan. Those benefits have to be provided outside of a pension plan to be called OPEB. Those of you who are familiar with PERF may realize that PERF provides a disability benefit. This disability benefit, however, does not change PERF into OPEB. PERF is still a pension plan. OPEB, however, does not include termination benefits or termination payments for sick leave. Termination benefits, as the title seems to indicate, are those inducements offered by the employer to active employees to hasten the termination of services or payments made in consequence of early termination of services. These can include early retirement incentives, severance benefits, or other termination-related benefits. Post-employment health care benefits include medical, dental, vision, and any other health-related benefits. Post-employment, of course, is the period after employment, and the OPEB plan is the arrangement through which OPEB is determined, assets that are dedicated for OPEB, if any, are accumulated or managed, and benefits are paid as they come due. You do not need to accumulate OPEB assets, however. Active employees are individuals that are employed by you at the end of the reporting period or within the measurement period as applicable. Inactive employees are those people no longer employed by you or their beneficiaries. Inactive employees can include individuals who have accumulated benefits under the term of an OPEB plan, but they're not yet receiving benefit payments, and they also include individuals currently receiving benefits. Depending on how your plan is designed, you may allow a period between the termination of the service and before they can enter OPEB plan, i.e. they must set out for 6 months, or you allow them 6 months to make that determination, or they can't participate until they reach a certain age. Those would be inactive employees who have earned the right to be in OPEB but yet are not active in it. Plan members, of course, are employees and their beneficiaries that are covered under the terms of the OPEB plan. Covered employee payroll is the payroll of those employees that are provided with OPEB through the plan, and covered payroll is the payroll on which contributions to a plan are based. Contributions are those additions to the plan's fiduciary net position for amounts from employers, any non-employer contributing entity that may exist, and the employees themselves. There are different types of plans. There can be a multiple employer defined benefit plan in which more than one employer participates and the the OPEB benefits are provided to the employees of more than one employer. A single employer-defined OPEB plan is what we run across most. That is that the employees of only one employer access the benefits. A cost-sharing employer is one in which the employees are provided OPEB through the cost-sharing multiple employer defined benefit plan. An agent multiple employer defined benefit plan looks somewhat similar, except for the Library A has a separate account. All the assets and contributions of Library A can only be used to provide OPEB benefits to the employees of Library A. They cannot be used to provide benefits to the employees of Library B. In a cost-sharing plan, all of the money is pooled. The money that Library A has contributed can be used to provide benefits to Library B. Let's correlate this to something we're familiar with, in other words, PERF. If you will remember, PERF used to be an agent multiple employer plan. In that situation, every participant in the plan had their own contribution rate because it was geared towards making sure that library paid enough money to pay the benefits for their employees. A couple of years ago, PERF changed to a cost-sharing employer plan, meaning that all of the money was pooled. There is a single contribution rate for all entities. It changes every couple of years, but it's a single rate. It doesn't matter if you're Library A, Library B, City A, the contribution rate is the same. A plan administrator is a company that handles the administration of your OPEB plan. You may or may not have a plan administrator. A plan administrator is not an actuary. An actuary is that individual that determines as of a point in time, which we call the actuarial evaluation date, the total liability you have, any related actual present value of projected benefits for your plan in conformity with actuarial standards of practice unless otherwise specified by GASB. And in addition, you can offer defined benefits or defined contribution plans. The criteria is that you have a defined contribution plan if you meet all the criteria for a defined contribution plan. If not, it defaults back into a defined benefit plan. Again, let's correlate this to something we're aware of, PERF. PERF hybrid has two components, the defined benefit plan and the defined contribution plan. An OPEB defined benefit and an OPEB defined contribution plan can be thought of in the same way. An OPEB defined contribution plan means that there will be money set aside for each individual and the benefits they get are limited to the value of those contributions in the future. In a defined benefit plan, the benefits can be stated as a specific dollar amount, an amount that is calculated based on one or more factors such as age, years of service, compensation, or it can be a type or level of coverage such as prescription drug coverage or a percentage of health insurance premiums. A lot of people, when we looked at the questions we got from the last AFR reporting period, thought health insurance was a defined contribution, i.e. I'm giving you so much in premiums, here's the plan, this is all you're getting. No, health insurance is a defined benefit plan because you're giving them a type or a level of coverage. Now let's move on to why do you want this? Why is this information important to know? And why are you asking for it instead of the DLGF? Well, as so often happens, state statute changed, and that's the reason why we are asking for this information now instead of the DLGF. This legislative change moved the responsibility for this information to us. This was done by IC Code 36-1-8 5-17.5. IC Code 5-11-1-4 outlines the authorization of the state examiner to determine the information requested in the AFR. For these reasons, this information is now in the State Board of Accounts AFR, and the information requested is not exactly the same as requested by the DLGF, as our focus is based on OPEB reporting established by GASB, which was what we just covered. And that's our focus. I am not certain what the DLGF focus was, and I will not discuss that any further because it's not really important anymore. This is where we're going. Here's the top OPEB section of the AFR. As you can see, we're asking for the name of your plan. This is the name of your choice. It simply needs to correlate easily to the plan. If you have more than one plan, of course you'll understand that having distinct names would be important. Next, we ask for the type of benefit provided by your plan. We have given you the most common OPEB plans that exist, being medical, dental, vision, hearing, death benefits, life insurance, disability, long-term care. We've also given you an other option. If you select other, we are asking you to describe what other really means. This is necessary because unlike pensions, which everyone understands is retirement income, OPEB is whatever you decide that it is. For example, universities frequently allow inactive plan members to obtain college credits at a discount. That's OPEB. If you were a city with a park that had a fitness center in it, and you allowed your employees and your inactive members to access that fitness facility at a discount, that's OPEB. That's why other is offered as an option here, because it can be what you want, and we cannot at all dictate what it should be or have any clue what it might be. So please be brief in describing what your other is if you have other. Again, we're asking for the name of your plan administrator, and you may or may not have one. If you don't, then just leave this portion blank. The last question here at the bottom is employer sponsoring the plan. Typically, this is you. But if you are in a pool with other governments, you may participate in someone else's plan. If that's the case, put that other government's name down there. On this next slide, we're going to go back up to the top. As you can see, I needed to jump around to fit all of these options on the slide so it was easily readable. The type of OPEB plans that we talked about earlier, these are the options that I'm asking for here. It's a drop-down menu. You'll need to select the one that fits your situation. In this next portion of the OPEB section, we are asking for the current number of participants. You'll see the 3 categories that we have here, and you may not have all these categories, depending again on the type of plan that you have. The number that you should be putting in here is the number of participants that you had at the end of the fiscal period that you're completing the AFR for. Moving down to contribution rates as a percentage of payroll. This is where we saw submitters having the most difficulty in the prior reporting period. I have an example on the next slide that I hope clears this up. What we are not asking for is the percentage of the portion of premiums paid by you, the employer, and the employee. What we are asking for is the percentage of the contributions as compared to covered payroll, and this needs to be a calculation by you. Let's look at a very simple example. You have one employee. That employee makes $50,000 a year. The total annual premium for the family coverage for this employee is $12,000, with 80% paid by you, the employer, which comes to $9,600, and 20% paid by the employee, which comes to $2,400. Frequently, what we had happen was people were trying to put 80% and 20% down, which doesn't make any sense. The employer is not paying 80% of $50,000 in premiums, and the employee certainly isn't paying 20%. So that's not right. What we are looking for is a calculation where you take the percentage of the premium paid by you, in this instance, which would be $9,600, by the $50,000 covered payroll to come up to 19.20%. Excuse me, I've got a tickled throat here. I'm going to pause and take a drink. I apologize for that delay. And as you can see, when we're looking for what the plan member's paying, they're paying about 4.8% of their salary for premiums. So this is a calculation that you will need to make. I hope that clears that up. That caused all sorts of problems last year. One of the last questions we're asking for is the cost method for funding purposes. I am not going to pretend to understand any or most of these options except pay as you go. The cost method for funding purposes refers to how you have decided to accumulate resources to be used to pay the liabilities as they come due. This is decided by management and or the governing body with the assistance of an actuary typically. What we see most is pay as you go. In other words, you're not pre-funding the plan, you're just paying things as you go along as the costs come up. Otherwise, if this is not the case, the contribution funding policy should be available from your plan administrator or found within the actuarial report or plan documents. We have accumulated frequently asked questions based on the experience we had in the last reporting period. I'm going to go over these, but we are going to have time at the end for your questions if your question does not get answered in these next couple of slides. We were frequently asked, or it was mentioned to us, that if you have the inactive employees or retirees paying 100% of the premium, you are not offering an OPEB plan because it doesn't cost you anything. And as such, you wouldn't need to complete the gateway section, correct? No. You need to complete the gateway section regardless of the premium paid by the inactive employee or retiree, because you made coverage available to them after employment as a result of their employment, meaning you are offering them an OPEB plan. The OPEB plan could be in a written policy, a labor contract, an employment contract, or it could be simply precedents due to standard operating procedure. And it could be costing you something due to the implicit rate subsidy. When older inactive employees are included in the pool of individuals insured, the blended premiums for everyone increases because older individuals access medical insurance more often and often for more expensive procedures. The difference between these premiums and the premiums that would have been charged if these older individuals were not in the pool of those insured, which is usually a smaller amount, is called the implicit rate subsidy. You don't need to know the exact amount of the implicit rate subsidy, and you will not be asked for it, but you need to be aware that it could very well be there. Also, we were asked, if I don't have a separate plan for inactive employees or retirees, but they simply stay on the plan the active employees can participate in, again, they have to pay 100%, this can't be OPEB because active employees participate also. No, this is an OPEB plan. OPEB plans do not require that coverage is only offered to inactive employees or retirees. Frequently, the benefit offered is that coverage offered current employees can be retained by inactive employees. Another question we were asked basically was, is COBRA an OPEB plan? COBRA does not need to be reported as OPEB in Gateway because COBRA is not an optional plan designed and offered by the employer to the employee as a result of employment. COBRA provides certain former employees, retirees, spouses, former spouses, and dependent children the right to temporary continuation of health coverage at group rates as required by law. Another question was, we don't offer any of the benefits listed in the Gateway OPEB section, so we don't offer any OPEB plan. Is that right? Nope. We listed the most common types of OPEB plans, but as we discussed earlier, other types exist. If you have other types, again, please click Other and try and describe that as briefly as possible in the box. We contribute to our employees' 403B plans, which are tax-sheltered annuity plans for retirement available to public school and government employees. These are an OPEB plan, right? No. The purpose of a 403B plan is to provide retirement income. All retirement income is a pension and not OPEB. Are worker compensation benefits considered OPEB? No. Worker compensation benefits are not provided as compensation for service. Thus, it is not OPEB. These next two questions are examples of the same situation with a small tweak. We provide our employees post-employment health insurance subsidy in the form of an additional monthly cash payment to each pension recipient. There's no limitation on the use of the additional cash payment. This is OPEB, right? No. Even though you intend the benefit for health care costs, you have not limited it to that purpose, so it's a pension and not OPEB. In the same situation, if you reimburse them for health care costs up to established limits, if they provide proof of health care insurance costs or any direct health care claims that are not reimbursed, then it is OPEB because your limitation makes it for post-employment health care. Last question on this slide. We convert employees' unused sick leave balances to individual health care accounts at the conclusion of active service to be applied to post-employment health care premiums or claims cost. This is OPEB, right? No. GASB specifically removes the conversion of unused sick leave to an individual health care account as OPEB. It calls it a termination payment of sick leave. Other questions. We offer health care benefits for 5 years to any employee with at least 20 years of service as an incentive to retire early. Right there is your answer. Any incentive to retire early is a termination cost and not OPEB. We provide disability benefits as a source of income until a recipient becomes eligible for pension benefits. The employee is required to terminate his or her employment to become eligible for disability. This is OPEB, right? Yes, as these are benefits provided after employment as part of the employee's total compensation for services, as indicated by the fact that eligibility for the benefits requires terminating employment and that the benefits are long-term. If, however, just like PERF, if these disability benefits are provided through a defined benefit pension plan, they would be pensions and not OPEB. I think we've answered this question earlier. How can we have active employees in an OPEB plan? Frequently, active and inactive employees participate in the same plan, such as health insurance, and active employees can be earning credits or contributing to accounts to be used after terminating employment. How can we have inactive employees not receiving benefits? Again, we talked about this a little bit earlier. It depends on how your plan is structured. Some plans allow time after termination of employee before the employee can participate, or within that time they have to consider whether they will or will not participate. At what point in time do we determine our number of active and inactive employees? This will be as of the end of the fiscal period for which you are filing your AFR. Covered payroll. How do you determine covered payroll? Well, that's going to be based on the type of payroll system you have. Covered payroll is the payroll on which the contributions to an OPEB plan are based. You have to look at the payroll system that you have, determine what reports are available to provide you this information, or the best method to calculate this amount. How do we determine covered payroll if our contributions are a flat fee per employee and is not based on payroll? You will still use the payroll of those employees that participate in the plan. Is covered payroll the net amount paid to employees, gross, or something else? Gross payroll is the proper amount to use. Is covered payroll only for employees that participate in the plan for the entire fiscal period? No. Covered payroll is any payroll on which contributions to an OPEB plan are based, regardless of how long the employee was in the plan. If employees contribute nothing to the plan, is there covered payroll? Usually, yes, because the employer usually makes contributions to the OPEB plan. And lastly, what time period do I use for covered payroll? You would use the entire fiscal period covered by the annual financial report. Contribution rates. How do I calculate a contribution rate if retirees participate in the plan and they are the only ones who participate in the plan as they have no covered payroll? In this situation, the percentage of contributions would be 0 because, as you've stated, retirees have no covered payroll. If I have both active and inactive participants, do I eliminate inactive participants' contributions for the calculation as they have no covered payroll? No. Both active and inactive participants' contributions are used in the calculation, although by definition, inactive participants would have no covered payroll. We have different contribution premium levels for different coverages. Do I need to calculate different percentages for each level of coverage? No. We're asking for a single percentage for each OPEB plan and not each level of coverage offered in that plan. And finally, what time period do I use for the contributions? Again, you would use the entire fiscal period covered by the AFR report that you are filing. How do you prepare for an audit when you have an OPEB plan? First of all, you would need to assemble all of your OPEB plan documents that detail the benefits, including how employees qualify for benefits, how premiums are determined, etc. This can be in an employee personnel policy or a separate document. It can be an employment contract. It can be a labor union negotiation contract. If it is standard operating procedure and not in a written document, please just jot down some of the details of your OPEB plan to hand to the auditor when they come. We would need the contract with your outside administrator if you have one, and any periodic report that that outside administrator provides you. We would need documentation supporting the information that you provided in your AFR, the reports you used for the payroll system, any report you obtained from HR, and the calculations that you may have performed, including how you determined the number of active employees, the inactive employees or beneficiaries currently receiving benefits, and those inactive employees entitled to but not yet receiving benefits. We would also want to know how you calculated the contribution rates as a percentage of payroll, what the contribution for the employees was for the fiscal period, the contributions you as the employer made for the fiscal period, and how you calculated the annual covered payroll. If you have an actuarial report, we would want to see that. We would also want to see the information requested by and provided to the actuary that they use to develop your actuarial valuation. Finally, we're at the end of my presentation, and I am available, or Todd and Susan also can help, to answer any additional OPEB questions that you may have.
Leann, there's one in the chat. Can you see it?
Yes, Todd, I can. Just
Okay.
give me a second to read. Let's see. The question says, it doesn't seem like we really offer OPEB even though we have completed the reports that we have, like COBRA. How do we go forward in stating that we don't? I would think that the next time you complete an AFR, you do not indicate that you have OPEB. That way, that section won't pop up. The auditor coming by will probably ask why you had one in 1 year and not the other. If you explain the situation, I'm sure they will be understanding, and it will no longer be an issue. Todd, Susan, do you think that's a reasonable answer?
Oh, I think it's very reasonable, yes.
We all make mistakes. I do it a couple times a week.
I've done it several times in the last 2 hours, so.
Well, not from my standpoint.
There's a question about future OPEB questions. Do they contact you or Susan and Todd? John, you can go ahead and contact us, and we can get with Leann if we need to, but you can just funnel it through us if that works.
And then I see a question about dental insurance after termination. Both active and inactive employees pay 100%. Do we still list the payroll of the active employees and the covered payroll? Yes, you are offering OPEB even though it appears that you as the employer are not paying for that coverage. Do we list the payroll of the active employees as covered payroll? Yes, I would. And in your percentages, you will show the employer's paying 0 and the employee's paying 100%. So that would make sense to anybody looking at it.
Well, very good. Thank you, Leann. Like I said, if anybody else has any questions after this, go ahead and send them to Susan or myself, and we'll see that Leann gets them, and then we'll get an answer back to you. So Susan, unless you had anything, I think that concludes what the Board of Accounts has for you today, and we would like to thank you for your time, and we will turn it back over to Haley.
Thank you, Leann. Thank you, Susan. Thank you, Todd.
You're welcome.
Next up, I'm going to go ahead and put your afternoon LEU file in the window to download. Jen Clifton, Director of the Library Development Office, is going to fill us in on some news from the State Library. But before I hand it over to her, I want to say that there are a few libraries where I'm still waiting for copies of your internet invoices for my calculations for the state technology grant. So I'm going to list those right now. Cambridge City, Clayton Liberty Township, Converse Jackson Township, Danville Center Township, Goodland and Grant Township, Hamilton East, Jasonville, Jonesboro, Logansport, Cass County, and Waveland Brown Township. If you are one of the libraries I just listed, still waiting for copies of 3 months of your internet invoices. So if you can just contact me and send those my way, that would be fantastic. And now it's time for Jen.
Thanks, Haley. Hi, everybody. Don't log off yet. I just have a few announcements for you. So the Indiana State Library is still open by appointment only, and there's information on our homepage on how to request an appointment or submit a reference question. So if you have any patrons that you wanted to refer to us, they are able to visit. We just need to know a little bit ahead of time. And we are accepting walk-up patrons as well. We're just trying to limit the traffic through the building since we are downtown, of course. We just wanted to remind the libraries that hadn't that we are still collecting those fiscal body forms where you reached out to your elected fiscal body to let them know about the new law in case your budget ever needed the review. So we did submit those to DLGF, but we will accept late forms. So if you haven't sent those in, just go ahead and get those to me as soon as you can. We have received published copies of the State Library and Public Library's annual report for 2019, and we are in the process of sending those out via Info Express. So look for an envelope, or if you requested any of those magazines that I had posted a week or so ago, they will be tucked in with those magazines that we're shipping to you. So just watch for those over the next week or two. We have a couple open positions here at the State Library. We are hiring a Evergreen coordinator, and the applications for that are currently due on November 24th, but I heard that may be extended a little bit. And then we are also hiring a director of public services. So that would be sort of an assistant director who would oversee our actual building and our in-person services here at the State Library. So if you're interested in that, just go to the Indiana jobs page for the state government. Evergreen 3.4 upgrade will take place over Thanksgiving weekend. And they also wanted me to remind everyone that there is a new community-wide Evergreen Book Club that you're able to join. So if you need any information about that, check out our Evergreen page. And our professional development staff has recorded several new micro-trainings on Inspire, Teaching Books, and the Young Reader Center. And those are uploaded to the Indiana e-Learning Lab, which is a interesting resource for students who may be learning at home or may be returning to learn at home shortly. Info Express. Now Courier is going to be surveying our participating libraries. So watch your email for a survey from them. It'll be a pretty quick little survey. They just want to get your feedback. So feel free to let them know if you're satisfied with their service. Our Talking Books and Braille Library wanted to let everybody know that they are moving towards a new duplication on demand service. So that will result in quicker turnaround times for your patrons that are using their services. And then just a final reminder that we will be closed tomorrow for Veterans Day. So that's all I have. Haley, if you wanted to say any last words.
Thanks, Jen. Thank you, everyone, for attending today. If you were unable to download this afternoon's LEU certificate or this morning's for any reason, send me an email, and I will get back to you with that by the end of the week. Since, of course, we are closed tomorrow, as Jen just said. So if you have any other questions, contact us. Any updates to including the archived webinar those updates will be posted on the State Library's LDO workshops page where you had the handouts here. They'll be posted as soon as they're available. The email is to me, Haley Trefun. It's going to be in that contact information that you should see in front of you, htrefun@library.in.gov. So everyone, thank you again today and have a great holiday season.